Today, we're going to talk about the risk of a currency collapse. We've seen a lot of discussion in the media that the markets prefer a DA and ANC coalition. And the reason why a lot of people say they prefer this is because they're trying to avoid a currency collapse. So just how real is that risk and what are the consequences of a potential currency collapse? And is it really a fair risk or fear in the South African market? So we're going to explore all of that. But just to start putting things into perspective, the Rand in the last few days has been weakening. It has been weakening. Just look at the graphic that I've put up, and you'll see that in the last 5 days, there's a bit of stability, and then there's been some weakening, right? And the other thing that I want you to think about and remember is that there are large currency reserves in South Africa in the hands of big business, in the hands of a few oligarchs. These large currency reserves are a volatile point for a currency because those individuals can begin to sell that particular currency. And how do you sell a currency? You start buying other currencies and you can actually flood the market with a particular currency. What happens when you flood the market with a particular currency? It sends a signal to other market traders and maybe other people, individuals who are holding on to large amounts of currency, that the currency is depreciating. They watch the charts, they dispose of a currency as well. And what that does, as it creates an avalanche, is that you can actually have a market collapse, market crash. Right. So let's look at first and foremost the elements of a currency. What are the elements of a currency? A currency, as you know, is a unit of exchange and it's a store of value. And in economics, they teach you various elements of a currency that make a good currency. So let me go through some of those quickly. Stability. You need to have price stability, economic stability. Number 2, acceptability. That currency needs to have widespread acceptance and needs to have the trust of the people. Number 3, durability. A currency needs to be durable, and that means that it must be able, it can't take a, you can't just have a currency, then it gets torn every 2 seconds. That's not going to be something that's durable, right? It's a store of value. So it needs to have integrity. So when you see some of the funny currencies on the continent, typically that money looks just like newspapers. And that's when you know that you're in trouble, right? So durability is important. Divisibility must be easy to divide from 100 to 10 cents, if you will. Portability, you want to have a currency easy to move around. Once you start having these currencies that need to be carried in wheelbarrows, you know that you're in a tricky situation. Uniformity must be standardized. That standardization must be recognizable. Scarcity. There needs to be a limited supply of that currency, and there needs to be controlled issuance of that currency. You can't have a currency that is just flooded all over the place, because that in and of itself creates problems, which we'll discuss a little bit later. It needs to have legal authority, it needs to be legal tender and have legal recognition, and that legal recognition should be enforceable. So you can't just go to a place and then they refuse the currency. That happens in other countries, by the way, where, for instance, when a currency has collapsed, let's say you're in Zimbabwe, some places will say, I don't want to take the Zimbabwean, whatever the hell it's called now. I just want to take the US dollar or the Rand. And it's not going to be easy for you as a citizen or a civilian or a tourist to say, no, I've got these ones, you've got to take these ones. So that's the enforceability issue that is sometimes discussed here, right? It needs to be convertible, and that means converting it into foreign currency, because sometimes they don't take funny money in the international stage. So if your currency is like rubbish, you won't actually even be able to change that currency into another currency, and that creates issues. It needs to have security, and it needs to have technology integration. These are the things, digital compatibility, etc. These are the things that actually make a good currency, right? So inversely, what makes a currency crash or what makes a currency collapse? A currency collapse occurs when a currency loses a significant portion of its value in a relatively short period of time. And this can have devastating effects on the economy, and it can lead to a phenomenon known as hyperinflation. And you don't want to have hyperinflation. Hyperinflation is one of the worst things, and we've seen it happening in Zimbabwe, where the currency just kept growing, till they even at some point had 100 trillion as a note. And I think that 100 trillion was buying a loaf of bread or something like that. So you don't want to have hyperinflation. It's a very, very bad thing. Loss of savings happen when you have that kind of thing. And as you begin to have hyperinflation, loss of savings, you also begin to have social instability as a result of that. Now, what causes this kind of a crash? I've already addressed hyperinflation, which is a result of excessive money supply and a lack of confidence. Excessive money supply and a lack of confidence. When a government prints too much money, when there is no economic growth, it can lead to hyperinflation. And you must remember, we discussed yesterday that the growth in the last quarter was very low at 0.6. No, actually, the growth declined, but the projection for the year is 0.6. And in the last 12 years, growth has averaged 0.8. So that's something that you need to be very aware of. The decline was 0.1. So not a very big decline, but a decline nonetheless. So you need to keep that in mind, right? When we're talking what we're talking. So economic instability is another one. When you have recession, depression, or you have high debt levels. So South Africa currently owes 5 trillion rands, right? And some of that money is owned in foreign currency, not in local currency. Okay? And that is a significant thing that you need to keep in mind. Just remember that a lot of the debt is also in foreign currency debt, right? So when the currency shifts and your currency loses value compared to those currencies, it becomes much harder for you to pay that debt. So high debt levels are a big thing. And South Africa is currently spending over 300 billion rands a year to service debts. And that's even more than it's spending on health, for example, which is at 271. So that puts it in perspective. Debt is a big risk. The other risk is political instability. When you have political instability, maybe caused by coalitions, maybe caused by violence, maybe caused by protests, that kind of thing, that also can lead to currency actually beginning to depreciate, because the international community is looking at that. They're holding your currency, then they're like, ooh, that's looking a bit hectic. So that's one of the things. The other big thing that can cause a currency to collapse, or by the way, the other element of policy instability is poor economic policies, mismanaged economic policies. These can also trigger a financial collapse. Big one that can cause financial collapse is the loss of investor confidence. Capital flight, that's what they call it. This is when investors lose confidence in a country's economy or political stability. Then they move their capital to another place, right? And that effectively devalues the currency. And if it happens at a rapid pace, that currency collapses. Other people see that happening. They ditch the currency. They go. Money is very nervous. And it's understandable why money is very nervous. People have spent a long time accumulating money. They work, they save, they make financial decisions. They are shouted at by bosses. Well, like, hey, where's my assignment? Where's my this? Where's the deadline? You missed the deadline. And you just smile. You smile because you're making your salary. You're like, oh, I'm going to retire, etc., etc. And then you get this money. Now you've got a lump sum of money. And those kind of older people who have these large amounts of money, who have large asset bases in a country, those people are very finicky. And even if you have 1,000 rands, if you give it to somebody and they're looking like they won't pay you back, you start following up a little bit more energetically, because you're worried about your money. So money is nervous. It's one of the most nervous things. And people who have lots of money are more nervous than most. That's why you always have to keep investors calm. Because if they panic, investors are like, I guess, basically like a springbok. Any movement in the jungle, they're gone. They're gone. Pop, gone. That's just the way it is. And we have to be honest about that. Okay, so loss of investor confidence, big thing. Speculation, however, is another reason why you can lose investor confidence. And this is where you can have even manipulation happening, because people can start spreading narratives, influential people even, which create anxiety in the market, unfounded anxiety. And that also can lead to people selling. So sometimes people are selling a currency not because there is a real concern, but because speculators are now looking to make a profit of the anxiety, or even looking to fabricate a particular anxiety so that they can make money. That also happens. That is also a real thing. You must be aware of that in this conversation. Loss of foreign reserves also cause a currency to collapse. Weaknesses in the financial system, whether there's a banking crisis, whether there are credit crunches, loss of sovereign rating. If you get downgraded, that can be a big thing. So have you seen recently Fitch, Moody's, the Fitches, the Moody's, the Fitches, the Moody, they're getting very moody, the Fitches, the Moody, they're getting very broody, the Fitches, the Moody's, they're saying SA and say, watch out, SA. That's what they say. So that's something that we have to be very, very aware of. Real things that are happening in real time. There are some critical examples that everyone keeps talking about when we're talking about foreign currency collapses. Number 1 is Zimbabwe. Number 2 is Venezuela. Number 3 is Argentina. I'm going to focus on the Zimbabwean collapse because it's instructive, it's next door. And I think we have to keep it in mind when we're having conversations about currency collapses. So here's what happened. There was a critical day in Zimbabwe when the currency really collapsed and lost over 70% of its value overnight. This day is known as Black Friday, 14 November 1997. And that was the beginning of the end. It was one of the most important events in the history of SADC. Do you hear me? That day, that Black Friday, 14 November 1997, was one of the most historic events in the history of SADC because that was the day when the Zimbabwean economy collapsed, and that was the day when everything else that followed, that was the day when that first domino fell. And it was a very big domino. So everything that everyone talks about, we talk about immigration a lot in the South African context, right? In 2001, there were 1.1 million foreign-born people living in South Africa. By the time we get to 2024, we have a number that is approaching 4 million. And a large part of that number comes from Zimbabwe. Another large part comes from Mozambique. So these events of 1997 accelerate some of the issues we are seeing in Africa, and if in Southern Africa particularly. And if this had not happened, Southern Africa would be in a different situation. So these market collapses are pretty significant, right? So here's what happened and the factors that affected the collapse of the Zimbabwean currency. Number 1, the war veterans in Zimbabwe demanded payouts. They said, hey, we fought the struggle. We didn't get any compensation. We're struggling. We're poor. You guys need to pay us money. And the amount of money was about 50,000 Zimbabwean dollars, the equivalent of about $2,500 in today money, or if you convert it, about $2,000 a month for everyone. And then all kinds of war veterans showed up, people who were 20, 22. It was being used by enemies of Robert Mugabe to try to consolidate a base within the ZANU-PF. So that was something that he was afraid of, and he gave them the money. That money was unbudgeted. It was unbudgeted. And it created a severe deficit in the fiscal, coffers of Zimbabwe. The deficit got bigger. Then there was also an unfunded military intervention in the DRC. Robert Mugabe, because he had mineral interests in the DRC, sent the Zimbabwean army into the DRC to help fight the rebel groups, etc., etc. This may sound similar because you've just seen that soldiers have actually died in the DRC. They've been sent there to fight similar conflict, resource conflict in the DRC. That's what has been happening in the DRC for the last 30 years. So these soldiers go, there's no money, but the money is being taken from other places. And that then precipitates everything else that began to happen. On the Black Friday, basically investors took their money out. They were like, that's it, we're done. This money is not safe. We've got to sell the Zimbabwean dollar. And the avalanche kicked in. After that happened, the stock market in and of itself also crashed. You get me? You get where I'm going? The stock market also crashed. So once the currency crashed, the stock market crashed, and then the economy was in a free fall. After that, what happened is that there was a surge in inflation. There were foreign currency exchange shortages. And then there was a loss of international support, downgrading of the currency, sanctions imposed. The other side of the equation is that Mugabe undertook an unlawful land reform program. There were farm seizures by the same war veterans that I spoke about earlier because they started spending that money. It ran out. Then they said, hey, the money's run out. The economy was now in a far worse position. Guess what they then chose to do? To take land. And they took it by themselves, violently so. And the international community saw that. And by that point, things were just gone too far. It was unlawful at the time. They did change the constitution later, even though that change in constitution was through bullying of the people, because there was a referendum in about 2000, and ZANU-PF and Robert Mugabe lost the referendum, right? They lost it. But then Mugabe was not having that, and he continued to insist upon a land reform program of expropriation without compensation in Nkani, basically. And then that caused further decline. So as you know, in the 2000s, Zimbabwe then went through a period of hyperinflation, where you began to see those kind of notes, people buying money in trolleys, shortages of fuel, shortages of food, shortages of everything. And at the same time, there was a draconian dictatorship cracking people's heads left, right, and center. And that created the mass exodus and the refugee crisis in the Southern African region, which is still being dealt with up until this point. So that's what happened. And this issue of currency collapse is a real issue. It's a dangerous issue. When a currency collapses, or when you start to have a weakening currency, the price of fuel goes up, the price of consumer goods goes up, the price of consumer durables goes up. A lot of things that are consumed in South Africa are manufactured in China. And as a result of that, you start to, if the fuel goes up and the rest of the goods that are being imported go up, that creates internal inflation, that creates a cost of living crisis. As you have high inflation, guess what's happened? The Reserve Bank raises the interest rates, right, to try to manage that inflation. As the interest rates go higher, more and more people who are on flexible interest loans are no longer able to meet their payments. They start to default, stuff starts getting repossessed, people start losing their homes, and that then becomes an economic crisis of epic proportions. The markets can do this. They have this power. People are sitting on large reserves of currency as we speak. So this is not a trivial issue. And there are some other factors that I think must be considered, which do make South Africa different from Zimbabwe. If you recall, one of the reasons why a currency can collapse is if you have a weak financial system. South Africa has a very strong, resilient financial system, number 19 in the world, according to the World Economic Forum Global Competitiveness Index. That word trips me up sometimes, but I got you. Competitiveness. No, I failed. Competitiveness Index. There you go. World Economic Forum. Global Competitiveness Index. Right? 19th in the world. So that's where South Africa sits there. That's a strong financial system. Also, South Africa has an independent reserve bank, which determines the monetary policy and also which determines the inflation targets, etc. All of that stuff is also protected within the Constitution. The Reserve Bank governor term has been extended as we go into this administration. And therefore, some of these risks that occurred in Zimbabwe cannot occur in South Africa. You cannot just change the mandate of the Reserve Bank. You need a certain constitutional threshold, and you need to have all of the votes to do that. Even with all of this pity, it's unlikely that the mandate of the Reserve Bank will be changed or that the Reserve Bank will stop being independent, right? So that's number one, and number two that needs to be considered. It's counterfactual to the market narrative of that everything will go bad if you have EFF, ANC, for instance, IFP coalition. That's being counteracted by the reality, and everybody knows that. So some of the analysis around why the market should collapse is not true, because the monetary policy is not going to change, right? And even in a coalition government, it's unlikely that the Minister of Finance will not come out of the ANC. And we've already seen that the ANC has been very cautious in how they manage the budget. They've not tried to go beyond their means, although there are some issues with the debt level. Most people have said that the management of the budget has been well within reason. That's why the currency hasn't over-weakened, even though we've had various finance ministers, except for Des Van Rooyen, that period that we saw the rand twerked. When Desmond, what's that song? Drop it like it's hot, drop it like it's hot. When Zuma appoints Des, drop it like it's hot, drop it like it's hot, drop it like it's hot. If Floyd gets close to finance, drop it like it's hot. That's what the market thinks. That's what the market thinks. So that's where they're at. So very important to keep that in perspective. Very important to keep that in perspective. Now, the other thing that's worth keeping in perspective is that In Zimbabwe, the land reform was uncoordinated, unlawful, you name it. Everything happened there that was chaotic. There's nobody who has called for unlawful, unstructured land reform in South Africa. While some have called for expropriation without compensation, which is something that the markets worry about quite a bit, because property rights are one of the big things that make people nervous when you start to talk about ANC, EFF, etc. But even that, we need to put that disclaimer that the EFF has not called for unlawful land reform. So even if there were to be a coalition, but also that's not to say that it will even happen, because they will not be able to necessarily change the constitution, even though there are some scholars who think you don't need to change in the constitution. That's where things are. Moving further, South Africa is not a dictatorship. It's not Zimbabwe, right? And that's a reality. Zimbabwe was a dictatorship where Mugabe could counteract the rule of law, the rule of courts. And when the courts ruled against him, he would go there and make them an offer that they could not refuse. Mugabe was a plata or plomo type of leader. That's what he was. And that's not the reality in South Africa. South Africa has independent media, strong institutions. South Africa has a strong middle class that has a lot of skin in the game. And also the power in South Africa is not focused only on Mugabe. The army doesn't go in and start cracking people's heads when Mugabe wants them to or anything like that. That's a totally different dispensation. That is not even something that has been on the table. So we have to really be aware of that, okay? It's not as what the markets are concerned about is not as likely as the most afraid in the market speak about, right? The prospects are lower than the market would suggest, much lower. And some of this is now actually speculation, right? I want to finish off by saying that in as much as I've spent this episode talking about the power that the markets have, you can't ignore that. You can't ignore that. I think it's Sun Tzu who said you need to know yourself and know your enemy. The markets are not necessarily the enemy, but they have interests. And some of those interests are not in the same alignment with the interests of the public or the interests of politicians. But we have to be aware what power the markets have so that we can understand how to navigate, how to conversate this critical moment. It's a very critical moment. And all people should be concerned about the state of a currency, because if a currency goes, everything goes. And that's why people have been sitting on these reserves for all of this time. But having said that, the markets are powerful, I do think that we have to ask ourselves about the ethics of powerful people who hold large amounts of money, powerful people who control these private investment corporations, equity, what do they call them? Private equity firms, who are able, with one click, few clicks of their computer, to change the value of a currency, and who are also able to use that threat to try to cajole politicians, elected officials, into deals that they think are preferential to their interests. It seems that that is an undermining of democracy, because the public gives the mandate, and the public gives a mandate to their representatives because they can hold those people to account. They can. And that process of holding them to account is called voting. But private equity firms do not account to the public. They account to shareholders. And the interests of those shareholders are profit maximization and are never disclosed to the public. And the public has no way of holding the shareholders and the executives of those companies to account through a voting system, right? Only an elite group of people who bought in by buying shares can do that. So what that means is that these private companies can act in ways which go against the national interest, hold currency, and make a threat to everybody that if you don't behave, we will drop this currency. That's something that I think should worry us all, and something that should give us pause and make us truly concerned about whether or not this kind of power in the hands of a few oligarchs, because in South Africa, the markets, the people sitting on these trillions of reserves are a few individuals. The South African market is an oligopoly. 4 big banks, 4 insurance companies, 4 construction companies, 4 this, 4 that, 4 that. I mean, it's slightly more, but you get what I'm trying to put across. And those companies are owned by just a few individuals. Not entirely, because there's shareholders, there's all of this, there's PIC and all of that other stuff. But by and large, there are a few big men who control the economic affairs of South Africa through its various companies. And they own so many companies. If you track how many companies these people own, you'll be shocked. Then the question, and then these people also contribute to political parties. So part of the dynamic now is that the people who own media houses, who own companies, who gave to particular political parties are now then using the fact that they also have large control and influence in the markets, and they own publications which control the markets or market sentiment to then say, hey, behave, or you'll see, I'll show you power. This is what's happening. We got to ask ourselves, is that ethical? Is it democratic? And how do we hold them to account for some of the games that they're playing? And if they prevail, they can destroy a whole nation. And they've done it before. They've done it before. What do you think, though? Let's have a conversation. Till the next one.